Welcome guys to another episode. This is Melody FS Academy. If this is your first time of coming across this channel, please do well to subscribe. Turn on the notification bell to get notified whenever we upload our weekly contents. Okay, so I promised I was going to do a series on the futures market. Okay, so this episode is actually going to be on the futures market, right? So let's get started. Okay, so I know it has been a while we talked about the futures market. Okay, so now this is the futures market on the weekly time frame. Okay, so now as you can see, currently we are bearish, right? So we have seen uh, price taking out the sell side liquidity. Okay, so I really don't have much to say on this time frame, but looking at this time frame alone, okay, we should be expecting some kind of retracement, right? And you can, as you can see from here, we have uh, this fair value gap, right? So now price has reached for the liquidity below this old low. Okay, so we should see some kind of, some kind of retracement. Okay, remove higher, probably, sorry, into this fair value gap. Okay, so if you had been following this, let's say you have been following this trend for a while now, you might probably want to be on the sideline and observe more price action data, okay, for your next line of action. Okay, but if I'm going to if I probably trading this on, let's say I'm following this trend, because I haven't looked at the futures market in a while. Okay, I probably should be expecting a kind of retracement to this fair value gap. Okay, I'll be probably watching out for this, for a move into this weekly fair value gap. Okay, it might likely retrace and continue lower, or it might likely reverse and start trending upwards from here. But we are still having a risk of market scenario, okay, in the sense that the dollar is still very much bullish. Okay, so since we are having a bullish dollar, we should be seeing bearishness in other asset class, right? So that is why this that's why we have been seeing some huge drawdown on foreign assets. Okay, so the bias remains bearish, but we can still we can still see some level of reach into this fair value gap that has been created right here. Okay, so now going down into the daily time frame. Okay, this is this old low being traded into, right? So we have this old low being traded into, and as you can see, price measuring this range from using the bodies of the candle, right? Using the bodies of the candle. Okay, so you will understand why we are using the bodies of the candle, because the wicks are actually a bit long. Okay, so that's why I'm using the bodies of the candle. Now you can see the bodies of the candle respecting respecting the equilibrium of this range. Okay, the midpoint of this range. Okay, slightly trading above it and dropping below. Okay, so now we have this old clean low, old clean highs right here. Okay, and we have this fair value gap that the daily highs, they have the wick trading into the reacting of the daily fair value gap, right? So this is more like a consolidation. Okay, this is more like a reaccumulation kind of phase. Okay, so I'm seeing this as a kind of consolidation, okay, being used for as a form of reaccumulation, right? Reaccumulation of maybe short positions or accumulation of long positions to go long. Okay, so in other words, you might likely want to pay more attention, pay very close attention if you are trading this asset class. Okay, because this was actually a target that has been wished for. Okay, and I would advise, if you have a target that has actually been wished for, you might want to, and you don't know the next line of action to take, the best line of action to take is to be on the sideline and watch price, uh, and watch price gives provide you with more evidence on the next line of action. Okay, so for the now, this market is probably consolidating, and we have seen some draw on the sell side liquidity. Okay, and we are probably in the discount sector. Okay, we are in a discount market sector, and we should see price reached for an opposing liquidity. Okay, and we have these old highs. Okay, so this price might likely is going to likely reach for above these old highs, okay, into the premium sector. Okay, it's going to likely reach for this because we are currently trading at a overbought market condition. Okay, we are in an overbought market condition right now. Okay, because price is deeply in a discount sector. Okay, so and once we talked about price reaching from some level of premium to discount, right? And if we have a certain level of liquidity being reached for, we should anticipate an opposing liquidity to be reached for. Okay, so what's the opposing liquidity that could be probably been reached for in this scenario is the liquidity resting above these old highs. Okay, so price is likely going to reach for these old highs. Okay, because we have already accumulated the sell side liquidity resting below these old lows, and now we have buy side liquidity resting above these old highs. Okay, so once the smart money are going to look for smart money are going to look for sellers to sell to, right? So they are going to look for where to distribute their long position that they have acquired short right here. Okay, so they are going to look to offload their long position, and where is that going to be? It's likely going to be above these old highs, right? Although we are consolidating, but we should expect some likelihood of price reaching for these old highs. Okay, so and at the same time we have this fair value gap. Okay, we have this fair value gap right here. Okay, so now that's my best scenario. Okay, so what I'm actually going to advise you to do is to be flexible. Although you are bearish, it does not give you it doesn't give room to go long. Okay, it doesn't prevent you from taking long entries. Okay, and as you can see, price is deeply in discount. Okay, so we might see some some longs being taken down here. Okay, into some short-term long entry be taken down here. Okay, to offload the long positions, okay, that have been accumulated down here right at these old highs. Okay, at the same time it's going to be on the premium sector. Okay, so now that is just that for what I think the market is going to do this week on you know on S&P, in the S&P 500. Okay, so now I'm going to look at this daily candle. Okay, because this though we are bearish, I'm going to look at what you are going to do, because in this case where we are right now, we should see some level of some level of long entries, some level of run on buy side liquidity, right? So now I'm going to make this making this episode to to show you what to expect on a long day. Okay, we are obviously bearish, but this is what you should expect in the fact that we are currently trading deep in deep discount. Okay, and we should see uh, some major move to sell side to the buy side liquidity. Okay, so the opposing liquidity. So this is what is actually going to look like. Okay, so this is what you should actually expect to see if the market is going to go long from here. Okay, so now this is this is a bullish day. Okay, so this is a bullish day. So now this is how you are going to know if the day is going to be bullish or bearish. Okay, obviously with benefit of hindsight, you can see that we are bullish on this day. Okay, so this is actually this day. So that should be on Wednesday's tradings. Okay, we have the Friday, the Thursday, and the Wednesday. Okay, so this is what you should be expecting at the maybe the earliest part of the week. Or okay, let's just say if we are going to have a bullish day, this is how you are going to trade it. Okay, midnight New York time, and between the May 4th 2022 to May 5th 2022. Okay, so now let's do some annotations. Okay, so now we start our trading on the futures market from 8:30 a.m. Okay, that is when we start our New York Q zone hunting. Okay, so we start our New York Q zone hunting from 8:30 a.m. Okay, you can then you start your London session from 2 to 5. Okay, from 2 a.m. to 5 a.m. Okay, so now this will probably be, okay, I didn't include the opening price, so this will probably be your opening price, right? Extend that out in time. Okay, so now for bullish days, combining it uh with the opening price, the power of 3. Okay, so we have our New York midnight opening price, and we have our New York session opening price, right? So now, what does the power of 3 says? Okay, if we are expecting a bullish days, if we are expecting a bullish day, we should see some run on buy side liquidity. Okay, we look for the first swing low prior to 8:30 a.m. Okay, obviously this was the first swing low prior to the 8:30 a.m. So the 8:30 a.m. is this candle right here. Okay, so what is the first swing low prior to 8:30 opening? This is the first swing low. Okay, so but we also have this swing low, and this swing low is inside the range of this swing low. Okay, so which is why I use this. Okay, you could have used any of this, is perfectly fine. Okay, so it's perfectly fine. Okay, so now we have two swing low right here, but this is okay. Okay, you can use this swing low. I just decided to use this one because this swing low is inside the range of this. Okay, so either is fine, but the first one is what you should actually be looking for. Okay, so this is the first swing low prior to 8:30 a.m. Okay, so now we also have our opening price. So what happened here is that we already know, we are aware of the fact that on a bullish day, using the power of 3, we should see some level of run on sell side liquidity, right? In other words, we should see price trade lower. Okay, creating the low of the day. We should see some level of short-term lows be taken out, right? So that's, which is exactly what we see here, right, and here. Okay, so now this is price trading below this old low. Okay, prior to 8:30 a.m. Okay, so now we'll go into this price action data and look for a shift in market structure. Okay, so now this is the 1 minute time frame, right? So as you can see, we had no shift in structure. Price kept on declining and until we got here. So okay, so this is our shift in structure. So we had this shift in structure, right? Now as you can see, we have the price retracing right here, creating this fair value gap. Okay, so this would have been my high probability entry, right? So now I talked about using the fib for measuring our fair value gap, for filtering out our fair value gap. Okay, if we if you you had used the Fibonacci retracement tool, you would have missed this entry, right? Probably that is one of the flaws on using the fib tools. Okay, in terms of filtering out our fair value gaps. Okay, but the benefit of using the fair value gap is that it helps you to reduce your risk at the same time. Okay, it helps you to reduce your risk. Okay, probably at the same times it might likely make you to miss your entry. Okay, if we had used the fib right here, as you can see, price didn't reach below the midpoint from this swing low to this swing high. Okay, it just traded into the first fair value gap. So you can see here, accelerated higher. Okay, so now this would have been my entry. Okay, and my stop loss. So how do you place your stop loss? Your stop loss should be below this the second fair value gap. Okay, so that would probably be right here. Okay, stop loss should be below the fair value gap, align the fact, giving the market space to breathe, and also At the same time, align price if it is going to likely reach for the second fair value gap, and is to, so that in other words, you should give room for it if price decides to reach for down for the second fair value gap. Okay, but in this case we saw that price didn't reach to the second fair value gap. So if you had used the second fair value gap, you would have missed your entry. Okay, so price traded downwards to the first fair value gap and accelerated. Okay, so this was our shift in structure right here, and we had the first swing high. Okay, so price would have probably, if you had used the first swing high, okay, is still okay, right? So because as you can see, we had no shift in structure, price just kept on declining until we got right here. So it's basically the same thing, right? So but in most cases you should use the first swing low, okay, because there are going to be times the price may not actually make it to the second swing low, right? So I just use this because of the benefit of hindsight. If I was trading this on the live chart, I would have probably used the first swing low. Okay, so that is what is advisable to use. Okay, and as you can see, we got 7.75 pip stop loss and a 35 pip entry, 34 pip, sorry, because we would have aimed at these clean highs, and you could have taken what you have and moved to the sidelines, because probably this is a counter trend entry, right? Because your bias was bearish. Okay, remember, we were bearish and we should have been looking for lower prices. Okay, so in other words, like I made mention, okay, looking at these clean highs, if price is going to reach uh for this clean highs, okay, because we are right now, we are deep in discount sector. Okay, we are deep in discount right now. Okay, the market is highly overbought right now. Okay, so this is the exact scenario you are going to see. Okay, this is the exact scenario you are going to be looking for. Okay, so but if price is going to keep on expanding lower, this is the opposite. We are going to actually see the opposite of this. Okay, so I'm actually doing this for you to know what to expect if price should decide to reach for these clean highs. Okay, so this is exactly what you are going to see. Okay, so you are going to see some level of some level of old lows be taken out, price creating the law of the day. Okay, as the protraction move, the fake move. Okay, so the Judas swing actually. Okay, so it could be price uh can retrace below the opening price 12 a.m. midnight, or the opening price 8:30 a.m. Okay, we actually, it depends on the section you are trading. Okay, if you are trading at the London section, you should see price trade below the opening price of the you know of the 12 midnight. Okay, that would be something like this. Okay, if you are trading, if let's say I was trading the London section, okay, that would have been something like this. Price would have traded below this old low, and I would have anticipated my long entry right here. Okay, I would have still been profitable, because this is actually a huge move as well. Okay, so now looking at this, if you are anticipating the for the London session, you would have looked at something like this. Okay, this is our opening price for our our New York Q zone, right? So this is price trading below our New York opening price. Okay, and at the same time, the first swing low, if you are bullish, remember, if you are bullish, you are looking for the first swing low to be taken out. If you are bearish, you are looking for the first swing high to be taken out. Okay, so if price is likely going to reach for these clean highs, because the market is currently overbought right now. Okay, we might see a short-term retracement to these old highs. If price is going to reach for this is the exact scenario you will see. Okay, but if it's going to keep on declining lower, you are going to see the opposite of this. Okay, you are going to see the opposite of this. Okay, so I hope you have found this insightful and helpful. Okay, if you have a question or a request, please do well to leave a comment, give this video a thumb up, and share it with your friends. Okay, I'm going to leave our Telegram group link on the description. Link is going to be on the description box. You can search and join our group, If you have further requests to make and you need assistance on any of the challenges you are facing on smart money, please do well to reach out, and I hope we all get to learn this market together. Okay, see you guys on the next episode. See you on Tuesday, on Tuesdays. Okay, because that's when I actually start trading for the week. Okay, so until next time, have a good trading day and a good trading week, and see you guys later. Thanks for joining us today.